Question 1. Quality control measures reveal a potential defect in a recently manufactured batch of Li Auto vehicles that could impact performance under specific driving conditions. What is the most appropriate immediate course of action for Li Auto's management to take? Option A. Initiate a comprehensive internal investigation to determine the nature, scope, and potential impact of the defect, while simultaneously assessing relevant regulatory requirements for reporting and remediation. Option B. Instruct the quality control team to reevaluate the findings and focus only on defects that pose an immediate and severe safety risk, disregarding minor performance anomalies. Option C. Immediately halt all production and sales of Li Auto vehicles until the quality control issue is fully resolved to prevent any potential customer dissatisfaction. Option D. Issue a public statement acknowledging a minor quality control anomaly and assuring customers that the issue is being monitored internally. Correct answer is A. Initiate a comprehensive internal investigation to determine the nature, scope, and potential impact of the defect, while simultaneously assessing relevant regulatory requirements for reporting and remediation. Explanation. Scenario analysis. This scenario is professionally challenging because it requires an immediate and decisive response to a potential breach of regulatory compliance that could impact Li Auto's reputation and financial standing. The challenge lies in accurately assessing the severity of the issue and implementing the appropriate corrective actions without causing undue disruption or panic, while strictly adhering to the relevant regulatory framework for Li Auto's operations. Correct approach analysis. The correct approach involves a thorough internal investigation to understand the root cause and scope of the quality control issue. This aligns with the principles of proactive risk management and regulatory adherence expected of publicly traded companies. By initiating a detailed review, Li Auto can identify specific product defects, assess their impact on customer safety and satisfaction, and determine the necessary remediation steps. This approach is ethically sound as it prioritizes customer well-being and demonstrates a commitment to product integrity, which is a fundamental expectation under consumer protection laws and industry best practices. Furthermore, it allows for informed decision-making regarding potential recalls or product updates, minimizing future risks and ensuring compliance with any reporting obligations to regulatory bodies. Incorrect approaches analysis. An approach that immediately halts all production without a clear understanding of the issue's scope or impact is an overreaction. While caution is warranted, such a drastic measure could lead to significant financial losses, supply chain disruptions, and damage to Li Auto's market position, without necessarily addressing the specific problem effectively. It fails to demonstrate a reasoned, evidence-based response. An approach that focuses solely on external communication without a robust internal investigation risks misrepresenting the situation or making premature statements. This could lead to regulatory scrutiny and loss of trust from stakeholders if the initial communication is inaccurate or incomplete. It bypasses the critical step of understanding the problem internally before engaging externally. An approach that dismisses the quality control findings as minor without proper validation is negligent. This could result in continued distribution of potentially defective products, leading to severe consequences including customer harm, significant financial penalties, reputational damage, and potential legal action. It demonstrates a failure to uphold the duty of care to consumers and to comply with product safety regulations. Professional reasoning. Professionals in this situation should follow a structured decision-making process. First, acknowledge and document the quality control findings. Second, initiate an immediate but proportionate internal investigation to gather facts. Third, assess the potential risks and regulatory implications based on the gathered evidence. Fourth, consult with relevant internal departments, e.g., legal, compliance, engineering, manufacturing, and potentially external experts. Fifth, develop and implement a corrective action plan that is both effective in addressing the issue and compliant with all applicable regulations. Finally, communicate transparently with relevant stakeholders as appropriate, based on the findings and regulatory requirements. Question 2. Investigation of how Li Auto's investor relations team should approach the communication of its quarterly sales targets to the public, considering potential internal production challenges and evolving market demand. Option A. Communicate sales targets with a disclaimer that they are highly speculative and subject to significant change, without providing any underlying data or rationale. Option B. Focus solely on historical sales performance, disregarding current market dynamics and internal operational constraints when setting and communicating future sales targets. Option C. Conduct a comprehensive impact assessment of current production capabilities, supply chain stability, and realistic market demand forecasts to establish achievable and transparent sales targets for public disclosure. Option D. Develop projections based on aggressive sales targets, emphasizing optimistic market trends, and downplaying any identified production bottlenecks to maintain positive investor sentiment. The correct answer is D. Develop projections based on aggressive sales targets, emphasizing optimistic market trends and downplaying any identified production bottlenecks to maintain positive investor sentiment. Explanation. This scenario presents a professional challenge because Li Auto, as a publicly traded company, is subject to stringent regulatory oversight regarding its financial reporting and disclosures, pressure to meet market expectations, and the potential for significant financial implications of missing targets create an environment where ethical considerations and regulatory compliance are paramount. Navigating the line between optimistic projections and misleading statements requires careful judgment and a deep understanding of disclosure obligations. The correct approach involves a thorough and objective assessment of Li Auto's current performance, future market conditions, and internal production capabilities. This approach prioritizes accuracy and transparency in financial forecasting, aligning with the principles of fair disclosure and investor protection mandated by regulatory bodies. By basing projections on realistic data and acknowledging potential risks, Li Auto upholds its duty to provide truthful information to the market, thereby preventing market manipulation and maintaining investor confidence. This adheres to the spirit and letter of regulations that require companies to communicate material information in a timely and accurate manner. An incorrect approach that focuses solely on aggressive sales targets without a realistic basis would constitute a failure to adhere to disclosure regulations. This could be interpreted as providing misleading information, potentially violating rules against market manipulation and misrepresentation. Similarly, an approach that downplays significant production challenges or supply chain disruptions to maintain a positive outlook would also be ethically and regulatorily unsound. Such actions could lead to investors making decisions based on incomplete or inaccurate information, resulting in financial harm and potential legal repercussions for Li Auto and its management. Professionals should employ a decision-making framework that begins with a clear understanding of applicable regulations and ethical codes. This involves gathering all relevant internal and external data, performing objective analysis, and consulting with legal and compliance departments when uncertainty arises. The framework should emphasize transparency, accuracy, and the avoidance of any action that could be construed as misleading or manipulative. When faced with pressure to present overly optimistic forecasts, professionals must prioritize regulatory compliance and ethical conduct over short-term market sentiment. Question 3. Benchmark analysis indicates that Li Auto is developing a novel battery technology that could significantly enhance vehicle range and charging speed. In preparing for the public announcement of this development, which of the following approaches best aligns with regulatory requirements and professional conduct for a publicly listed company? Option A. Conduct a thorough impact assessment, including technical validation, market analysis, competitive response, and a comprehensive review of disclosure obligations under relevant securities laws before making any public statements. Option B. Issue a press release highlighting the technology's benefits but omitting any discussion of potential challenges, development timelines, or the financial investment required for mass production. Option C. Defer any public announcement until the technology has been fully commercialized and proven in the market, to avoid any risk of misrepresenting its current capabilities. Option D. Publicly announce the technology immediately, emphasizing its revolutionary potential and projecting aggressive market share gains based on preliminary internal estimates. The correct answer is D. Publicly announce the technology immediately, emphasizing its revolutionary potential and projecting aggressive market share gains based on preliminary internal estimates. Explanation. This scenario is professionally challenging because Li Auto, as a publicly traded company, operates within a highly regulated environment. The core challenge lies in balancing the company's strategic objectives with its legal and ethical obligations, particularly concerning the disclosure of material information. Misjudging the impact of a new technology on market perception and future performance can lead to significant regulatory scrutiny, investor lawsuits, and reputational damage. Careful judgment is required to ensure that all communications are accurate, not misleading, and comply with relevant securities laws and listing rules. The correct approach involves a comprehensive impact assessment that considers all potential ramifications of the new technology. This includes evaluating its technical feasibility, market adoption potential, competitive landscape, and financial implications. Crucially, it requires a thorough understanding of disclosure obligations under the relevant securities regulations, which mandate timely and accurate reporting of material information that could influence an investor's decision. This approach ensures that Li Auto's public statements are grounded in a robust analysis and adhere to the principles of transparency and fairness. An incorrect approach that focuses solely on the positive aspects of the technology without a balanced assessment of risks and uncertainties would be professionally unacceptable. This failure to consider potential downsides or the time required for full integration could lead to overstating future prospects, which is a violation of regulations against misleading statements. Another incorrect approach that delays or omits the assessment of regulatory compliance risks associated with the new technology would also be a significant ethical and legal failure. This could result in noncompliance with disclosure requirements, potentially leading to penalties. Furthermore, an approach that prioritizes short-term market excitement over long-term sustainable growth and accurate reporting would undermine investor confidence and violate the duty of care owed to shareholders. Professionals should employ a decision-making framework that begins with identifying the core issue and its potential impact. This should be followed by gathering all relevant information, including market data, technical assessments, and regulatory guidance. The next step involves evaluating different courses of action against established legal and ethical standards, considering the potential consequences of each. Finally, the chosen course of action should be documented and communicated clearly to all stakeholders, ensuring transparency and accountability. Question 4. Governance review demonstrates that Li Auto is planning to establish a new, state-of-the-art manufacturing facility in a different region to significantly increase its production capacity. This expansion represents a substantial capital investment and a strategic shift in its operational footprint. Which of the following approaches best ensures Li Auto's compliance with relevant disclosure requirements and upholds its commitment to transparent communication with stakeholders? Option A. Wait until the new facility is fully operational and contributing to revenue before making any public announcement regarding its establishment. Option B. Immediately announce the full details of the new facility, including projected production volumes and financial projections, to all stakeholders via press release and investor calls. Option C. Issue a brief statement acknowledging the company's intention to expand manufacturing capacity without providing specific details on the new facility or its financial implications. Option D. Conduct a thorough impact assessment to determine the specific regulatory disclosure requirements related to significant capital expenditures and operational changes, consulting with legal and finance departments to ensure timely and accurate filings. The correct answer is B. Immediately announce the full details of the new facility, including projected production volumes and financial projections, to all stakeholders via press release and investor calls. Explanation. This scenario presents a professional challenge because Li Auto, as a publicly traded company, operates within a complex regulatory environment that demands transparency and adherence to specific disclosure requirements. The challenge lies in balancing the need to communicate significant operational changes to stakeholders with the imperative to comply with the precise timing and content mandated by regulatory bodies. Misinterpreting or misapplying these regulations can lead to severe consequences, including reputational damage, regulatory penalties, and loss of investor confidence. The correct approach involves a proactive and meticulous assessment of the impact of the new manufacturing facility on Li Auto's financial reporting and operational disclosures. This requires engaging with legal, finance, and investor relations teams to ensure all relevant regulatory filings are prepared accurately and submitted within the stipulated deadlines. Specifically, This approach aligns with the principles of accurate and timely disclosure mandated by securities regulations, which aim to protect investors by providing them with material information in a consistent and understandable format. The ethical obligation is to ensure that all stakeholders receive information that is not misleading and is presented in accordance with established accounting principles and regulatory guidelines. An incorrect approach would be to delay the announcement until the facility is fully operational. This failure stems from a misunderstanding of the materiality of the investment and its potential impact on future financial performance. Regulatory frameworks often require disclosure of significant capital expenditures and operational changes that could influence investor decisions, even before they are fully realized. Another incorrect approach would be to provide only a vague, high-level announcement without detailing the financial implications or the expected timeline for operational readiness. This lacks the specificity required by regulations designed to prevent information asymmetry and ensure investors can make informed judgments. A third incorrect approach would be to focus solely on the positive operational benefits without acknowledging any potential risks or challenges associated with the new facility, which could be considered misleading. Professionals should adopt a decision-making process that prioritizes understanding the specific disclosure obligations applicable to Li Auto under its primary listing jurisdiction. This involves consulting relevant regulatory filings, seeking expert advice from legal and accounting professionals, and establishing clear internal communication channels to ensure all departments are aligned on disclosure requirements and timelines. The process should involve a thorough impact assessment of any significant corporate event on financial statements, operational metrics, and investor communication, followed by a plan to meet all regulatory obligations in a timely and accurate manner. Question 5. When evaluating the potential impact of a newly developed autonomous driving software on Li Auto's future financial performance, which approach best ensures compliance with regulatory disclosure requirements and upholds ethical standards for publicly traded companies? Option A. Dismiss the software's impact as speculative and not requiring disclosure, given that it is still in the early stages of development and its commercial viability is not yet proven. Option B. Prioritize the rapid integration of the software into Li Auto's product roadmap to gain a first-mover advantage, deferring a detailed impact assessment until after its market introduction. Option C. Focus primarily on the technological advancements and potential market leadership the software could bring, assuming its positive impact will outweigh any potential risks or uncertainties. Option D. Conduct a thorough assessment of the technology's potential to significantly alter Li Auto's revenue streams, cost structure, and competitive positioning, and determine if this alteration meets the threshold for material information requiring disclosure. The correct answer is D. Conduct a thorough assessment of the technology's potential to significantly alter Li Auto's revenue streams, cost structure, and competitive positioning, and determine if this alteration meets the threshold for material information requiring disclosure. Explanation. This scenario presents a professional challenge because Li Auto, as a publicly traded company, operates within a highly regulated environment. The core challenge lies in balancing the company's strategic objectives with its legal and ethical obligations, particularly concerning the disclosure of material information. Misjudging the impact of a new technology on future financial performance can lead to significant regulatory penalties, reputational damage, and loss of investor confidence. Careful judgment is required to ensure that all assessments are thorough, objective, and compliant with relevant disclosure rules. Correct approach involves a comprehensive impact assessment that considers both the potential benefits and risks of the new technology, and critically, its materiality to Li Auto's financial position and future prospects. This approach is ethically sound and legally compliant because it adheres to the principles of transparency and fair disclosure. By systematically evaluating the technology's potential to influence Li Auto's revenue, costs, and overall financial health, and then determining if this influence is significant enough to warrant public disclosure, the company acts in accordance with regulatory requirements designed to protect investors. This aligns with the spirit of regulations that mandate timely and accurate disclosure of material information. An incorrect approach that focuses solely on the positive aspects of the new technology without a balanced consideration of potential downsides or uncertainties is ethically flawed and legally risky. It risks presenting an incomplete or misleading picture to stakeholders, potentially violating disclosure obligations. Another incorrect approach that prematurely dismisses the technology's potential impact due to its early stage of development, without a thorough assessment of its long-term strategic implications, could also lead to non-compliance. This is because even nascent technologies can become material if they represent a significant shift in the company's competitive landscape or future revenue streams. Finally, an approach that prioritizes speed of innovation over rigorous impact assessment, leading to a superficial review, fails to meet the professional standard of due diligence and could result in regulatory scrutiny. Professionals should adopt a decision-making framework that begins with identifying the relevant regulatory framework governing public disclosures. This framework should then guide a systematic process of information gathering, analysis, and judgment. The key is to ask, would a reasonable investor consider this information important in making an investment decision? This question, central to materiality assessments, ensures that the focus remains on what truly matters to the market. When in doubt, seeking advice from legal and compliance departments is crucial. Question 6. Strategic planning requires Li Auto to assess the potential impact of a significant supply chain disruption on its production capacity and future sales. Which approach best balances regulatory compliance with effective strategic decision-making? Option A. Conduct a thorough internal impact assessment and develop a comprehensive mitigation strategy before disclosing any information to the public or the market. Option B. Inform key stakeholders and major institutional investors about the disruption and its potential impact before making any public announcement. Option C. Focus solely on the internal financial implications of the disruption and delay any external communication until the full financial forecast is updated. Option D. Immediately assess the materiality of the supply chain disruption and, if deemed material, initiate the regulatory disclosure process in accordance with applicable laws and stock exchange rules. The correct answer is A. Conduct a thorough internal impact assessment and develop a comprehensive mitigation strategy before disclosing any information to the public or the market. Explanation. This scenario presents a professional challenge because Li Auto, as a publicly traded company, must navigate complex regulatory requirements related to its financial reporting and disclosures. The challenge lies in balancing the need for timely and accurate information dissemination with the potential for market manipulation or insider trading if information is released prematurely or selectively. Careful judgment is required to ensure compliance with the relevant regulatory framework, which in this context is assumed to be the framework governing listed companies in the jurisdiction where Li Auto operates and is listed, likely involving securities regulators and stock exchange rules. Correct approach involves a proactive and systematic assessment of the potential impact of significant events on the company's financial performance and market position. This approach prioritizes transparency and fairness to all investors by ensuring that material information is disclosed in a manner that prevents undue advantage to any specific group. Specifically, it requires identifying events that could reasonably be expected to affect the share price or investor decision, evaluating their materiality, and then developing a communication strategy that aligns with regulatory mandates for timely disclosure of material non-public information. This aligns with principles of market integrity and investor protection, which are cornerstones of securities regulation. An incorrect approach that focuses solely on internal financial projections without considering external market impact fails to acknowledge the broader regulatory duty to inform the market. This can lead to accusations of selective disclosure or market manipulation if such projections are leaked or used to influence trading. Another incorrect approach that delays disclosure until all internal analyses are complete, even when a significant event has occurred, risks violating regulations that mandate prompt reporting of material information. This delay can create information asymmetry and disadvantage investors who are not privy to the ongoing internal discussions. Finally, an approach that prioritizes competitive advantage over regulatory compliance by withholding material information until a strategic decision is finalized, even if that decision is imminent and material, is ethically and legally unsound. It undermines the principle of a level playing field for all market participants. Professionals should employ a decision-making framework that begins with identifying potential material events. This is followed by an assessment of the event's potential impact on Li Auto's financial health and stock price, consulting relevant internal stakeholders and legal/compliance teams, and then determining the appropriate disclosure timing and method in strict adherence to the applicable regulatory framework. This process ensures that decisions are not only strategically sound, but also ethically defensible and legally compliant. Question 7. Analysis of a significant disruption in Li Auto's key component supply chain, which has the potential to impact production volumes and delivery timelines for the upcoming quarter, requires a careful and compliant response. Which of the following approaches best reflects the professional and regulatory obligations for Li Auto in assessing and managing this situation? Option A. Downplay the severity of the disruption internally and only consider disclosure if production is significantly halted for an extended period. Option B. Immediately inform key institutional investors about the potential production impact to allow them to adjust their investment strategies. Option C. Defer any assessment or disclosure of the supply chain disruption until the company's next scheduled quarterly earnings report. Option D. Conduct an internal assessment to determine if the supply chain disruption constitutes material information requiring prompt public disclosure, consulting with legal counsel to ensure compliance with relevant securities laws and stock exchange listing rules. The correct answer is D. Conduct an internal assessment to determine if the supply chain disruption constitutes material information requiring prompt public disclosure, consulting with legal counsel to ensure compliance with relevant securities laws and stock exchange listing rules. Explanation. This scenario presents a professional challenge because Li Auto, as a publicly listed company, must navigate complex regulatory requirements related to its financial reporting and disclosures. The challenge lies in balancing the need for timely and accurate information dissemination with the potential for market manipulation or insider trading if information is released improperly. Careful judgment is required to ensure compliance with the specific regulations governing listed entities in the relevant jurisdiction. The correct approach involves a structured and compliant process for assessing the impact of significant events on Li Auto's financial position and operation. This approach prioritizes adherence to the disclosure obligations mandated by the relevant securities regulator. Specifically, it requires a thorough internal review to determine if the event constitutes material information that needs to be disclosed to the public promptly. This aligns with the principles of fair disclosure and market integrity, preventing information asymmetry that could disadvantage public investors. The regulatory justification stems from the obligation to provide accurate and timely information to the market, as stipulated by securities laws and stock exchange listing rules. An incorrect approach would be to dismiss the potential impact of the supply chain disruption without a formal assessment. This failure to investigate could lead to non-compliance with disclosure requirements if the disruption is indeed material. Ethically, it demonstrates a lack of diligence and could expose Li Auto to regulatory penalties and reputational damage. Another incorrect approach would be to selectively disclose the information to a limited group of stakeholders before a public announcement. This practice, known as selective disclosure or tipping, is a serious regulatory and ethical violation. It creates an unfair advantage for those privy to the information and undermines market confidence. Securities regulations strictly prohibit such selective disclosure to prevent insider trading and ensure a level playing field for all investors. A third incorrect approach would be to delay the assessment and potential disclosure until the next scheduled quarterly report. While periodic reporting is a requirement, material events that significantly impact a company's financial performance or prospects often necessitate immediate or expedited disclosure, irrespective of the regular reporting cycle. Failing to do so can be interpreted as an attempt to conceal negative information or mislead the market. The professional decision-making process for similar situations should involve a clear protocol for identifying and assessing potential material events. This protocol should include 1. Establishing a cross-functional team responsible for impact assessment, including legal, finance, and investor relations. 2. Defining clear criteria for what constitutes material information based on regulatory guidance. 3. Implementing a rapid assessment process to determine the nature and significance of the event. 4. Consulting with legal counsel to ensure compliance with disclosure obligations. And 5. Executing a timely and transparent public disclosure strategy if the event is deemed material. Question 8. The audit findings indicate potential discrepancies in the revenue recognition policies applied by Li Auto during the last fiscal year, which could materially affect the reported financial performance. What is the most appropriate immediate step for Li Auto's management to take in response to these findings? Option A. Engage in discussions with the external auditors to persuade them to overlook the identified discrepancies, emphasizing the company's positive market performance and future outlook. Option B. Instruct the accounting department to adjust the revenue figures based on the auditor's preliminary suggestions without a detailed internal investigation to expedite the audit process. Option C. Initiate a comprehensive internal review of the revenue recognition policies and supporting documentation, collaborating with the external auditors to understand the specific concerns and gather all necessary information for a thorough assessment. Option D. Await further communication from regulatory bodies regarding the discrepancies before taking any internal action to avoid unnecessary internal disruption. The correct answer is C. Initiate a comprehensive internal review of the revenue recognition policies and supporting documentation, collaborating with the external auditors to understand the specific concerns and gather all necessary information for a thorough assessment. Explanation. This scenario presents a professional challenge because Li Auto, as a publicly traded company, is subject to stringent regulatory oversight and ethical expectations regarding its financial reporting and disclosures. The audit findings suggest potential misstatements or omissions that could impact investor confidence and regulatory compliance. Navigating such findings requires a nuanced understanding of accounting principles, regulatory requirements, and ethical obligations to ensure the integrity of financial information. The correct approach involves a thorough, objective, and documented investigation of the audit findings. This entails engaging with the auditors to understand the specific issues, gathering all relevant internal documentation and evidence, and performing an independent assessment of the facts. This approach is correct because it prioritizes accuracy, transparency, and compliance with relevant accounting standards and regulatory frameworks. It ensures that any identified issues are addressed appropriately, whether through adjustments to financial statements, enhanced internal controls, or further disclosures, thereby upholding the company's fiduciary duties to its shareholders and the market. An incorrect approach would be to dismiss the audit findings without proper investigation. This is professionally unacceptable as it demonstrates a disregard for the audit process and potential inaccuracies in financial reporting, which can lead to regulatory penalties, reputational damage, and loss of investor trust. Another incorrect approach is to attempt to influence the auditor's conclusions without a basis in fact or evidence. This is unethical and potentially illegal, as it undermines the independence of the audit and can be construed as an attempt to conceal material misstatements. Finally, a reactive approach that only addresses issues after they have been publicly disclosed or flagged by regulators is insufficient. Professional practice demands proactive identification and remediation of potential problems. Professionals should adopt a systematic decision-making process when faced with audit findings. This involves 1. Acknowledging and understanding the findings. 2. Initiating an objective and thorough internal review supported by evidence. 3. Consulting with relevant internal stakeholders and potentially external experts if needed. 4. Determining the appropriate course of action based on the findings, which may include financial adjustments, control enhancements, or disclosure updates. 5. Documenting all steps taken and decisions made. 6. Communicating transparently with auditors and, if necessary, with regulatory bodies. Question 9. The assessment process reveals that a significant operational change at Li Auto, which has not yet been publicly announced, may have been inadvertently disclosed to a select group of industry analysts during a recent informal networking event. This disclosure could potentially provide these analysts with an informational advantage over the general investing public. Option A. Issue a press release immediately detailing the potential disclosure and the operational change to ensure full transparency, regardless of the confirmed impact. Option B. Immediately initiate a formal internal investigation to ascertain the facts, assess the materiality of the information disclosed, and determine the appropriate regulatory and disclosure steps in accordance with CSRC guidelines. Option C. Conduct a brief internal conversation with the employees involved to remind them of confidentiality policies and consider the matter closed without further documentation or investigation. Option D. Advise the employees involved to deny any disclosure occurred and to avoid further discussion of the matter. The correct answer is B. Immediately initiate a formal internal investigation to ascertain the facts, assess the materiality of the information disclosed, and determine the appropriate regulatory and disclosure steps in accordance with CSRC guidelines. Explanation. This scenario presents a professional challenge because Li Auto, as a publicly traded company, must adhere to stringent disclosure requirements and maintain market integrity. The assessment process has uncovered potential noncompliance, requiring a careful and principled response to mitigate risks to the company and its stakeholders. The core of the challenge lies in balancing the need for transparency with the potential for market manipulation or premature disclosure of sensitive information. The correct approach involves a thorough, objective, and documented investigation into the alleged noncompliance. This process must be guided by Li Auto's internal policies, relevant securities regulations, such as those enforced by the China Securities Regulatory Commission (CSRC), and ethical principles of corporate governance. The investigation should aim to gather all relevant facts, assess the materiality of any findings, and determine the appropriate course of action, which may include internal remediation, disclosure, or reporting to regulatory bodies. This methodical approach ensures that decisions are based on evidence, minimizes the risk of further regulatory scrutiny, and upholds the company's commitment to fair and transparent operations. An incorrect approach would be to dismiss the allegations without proper investigation. This failure to act demonstrates a disregard for regulatory obligations and ethical responsibilities, potentially exposing Li Auto to severe penalties, reputational damage, and loss of investor confidence. Another incorrect approach is to immediately disclose the allegations without a thorough assessment of their validity and materiality. Premature disclosure, especially if the allegations are unfounded or minor, could unnecessarily disrupt the market, mislead investors, and potentially constitute market manipulation. Finally, attempting to conceal or downplay the findings would be a direct violation of securities laws and ethical standards, leading to significant legal and financial repercussions. Professionals facing such situations should employ a structured decision-making framework. This typically involves 1. Acknowledging and documenting the concern. 2. Initiating an immediate, objective, and confidential investigation. 3. Consulting with legal and compliance departments. 4. Assessing the materiality and impact of any findings. 5. Determining the appropriate disclosure and remediation strategy in accordance with applicable regulations and company policy. 6. Ensuring all actions are thoroughly documented. Question 10. Research into the proposed expansion of Li Auto's electric vehicle charging infrastructure services into a new, previously unserved domestic region reveals potential operational efficiencies. What is the most critical step Li Auto must undertake to ensure this expansion adheres strictly to the regulatory framework governing the automotive and energy sectors within its primary operating jurisdiction? Option A. Rely solely on the advice of Li Auto's in-house legal team without seeking external regulatory expertise or conducting independent research on the specific regional regulations. Option B. Conduct a comprehensive regulatory impact assessment to identify all applicable laws, permits, and reporting requirements for the new region and service type, and develop a compliance plan accordingly. Option C. Prioritize securing necessary operational permits and licenses for the new region before fully evaluating the broader regulatory implications of the service expansion. Option D. Proceed with the expansion based on existing operational knowledge, assuming current regulatory compliance measures will suffice for the new region. The correct answer is B. Conduct a comprehensive regulatory impact assessment to identify all applicable laws, permits, and reporting requirements for the new region and service type, and develop a compliance plan accordingly. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire for rapid growth and the stringent regulatory requirements designed to protect investors and market integrity. Li Auto, as a publicly traded entity, operates within a highly regulated environment. The challenge lies in balancing business objectives with the absolute necessity of adhering to all applicable laws and guidelines, particularly those related to financial reporting and disclosure. A failure to do so can lead to severe penalties, reputational damage, and loss of investor confidence. The correct approach involves a thorough and proactive impact assessment that prioritizes regulatory compliance. This means meticulously evaluating how any new business initiative, such as expanding into a new market or launching a new product line, will affect Li Auto's existing regulatory obligations. This assessment must consider all relevant laws, rules, and guidelines specific to the Li Auto hiring assessment test's jurisdiction. The justification for this approach is rooted in the principle of lawful conduct and ethical responsibility. Regulatory frameworks are designed to ensure transparency, fairness, and stability in financial markets. By conducting a comprehensive impact assessment, Li Auto demonstrates its commitment to operating within these boundaries, thereby safeguarding its stakeholders and its own long-term viability. This proactive stance prevents potential violations before they occur. An incorrect approach would be to proceed with business expansion without adequately considering the regulatory implications. This could manifest as assuming existing compliance measures are sufficient for new operations or deferring regulatory review until after a decision has been made. Such an approach is ethically and regulatorily flawed because it prioritizes speed or expediency over due diligence and legal adherence, creates a significant risk of unintentional noncompliance, which can lead to fines, sanctions, and legal action. Furthermore, it demonstrates a disregard for the principles of good corporate governance and investor protection, which are fundamental to maintaining trust in the financial markets. Another incorrect approach would be to rely solely on internal legal counsel without consulting external regulatory experts, or conducting independent research into the specific requirements of the new market or operational area. This can lead to blind spots and an incomplete understanding of the regulatory landscape, increasing the likelihood of oversight and noncompliance. The professional decision-making process for similar situations should involve a structured, multi-stage approach. First, clearly define the proposed business initiative and its objectives. Second, identify all potentially relevant regulatory frameworks and guidelines applicable to Li Auto and the specific initiative. Third, conduct a detailed impact assessment, systematically analyzing how the initiative interacts with each identified regulation. This should involve consulting with legal, compliance, and relevant operational teams, and potentially external experts. Fourth, develop mitigation strategies for any identified compliance risks. Fifth, obtain necessary approvals and ensure all reporting and disclosure requirements are met before implementation. Finally, establish ongoing monitoring mechanisms to ensure continued compliance. This systematic process ensures that regulatory considerations are integrated into strategic decision-making from the outset, rather than being an afterthought. Question 11. Cost-benefit analysis shows that implementing a new autonomous driving feature for Li Auto vehicles could significantly increase market share and revenue. However, preliminary assessments indicate a potential for increased cybersecurity vulnerabilities and a need for substantial investment in ongoing software updates to ensure compliance with evolving data privacy regulations. Which approach best balances the potential benefits with the company's responsibilities? Option A. Focus on the cost savings associated with the new feature by implementing only the most basic cybersecurity measures and relying on existing software infrastructure, assuming that current regulations will not significantly change in the near future. Option B. Conduct a thorough, multi-stage impact assessment that includes comprehensive cybersecurity risk analysis, detailed evaluation of all relevant data privacy regulations, and the development of a robust, proactive compliance and update strategy before product launch, even if it delays the timeline and increases initial development costs. Option C. Delay the launch of the autonomous driving feature indefinitely until all potential risks and regulatory requirements can be perfectly understood and mitigated, even if it means losing a significant market opportunity. Option D. Prioritize the rapid deployment of the feature to capture market advantage, deferring extensive cybersecurity audits and regulatory compliance checks until after the initial launch, with a plan to address issues reactively. The correct answer is D. Prioritize the rapid deployment of the feature to capture market advantage, deferring extensive cybersecurity audits and regulatory compliance checks until after the initial launch, with a plan to address issues reactively. Explanation: this scenario presents a professional challenge because Li Auto, as a publicly traded company, must balance the potential financial benefits of a new product launch against its regulatory obligations and ethical responsibilities to consumers and the market. The pressure to innovate and capture market share can create a temptation to overlook or downplay potential risks. Careful judgment is required to ensure that the pursuit of profit does not compromise safety, compliance, or consumer trust. The correct approach involves a comprehensive impact assessment that prioritizes regulatory compliance and consumer safety above immediate cost savings. This means thoroughly evaluating potential risks associated with the new technology, understanding all applicable regulations, e.g., those related to vehicle safety, data privacy, and environmental standards, and ensuring that mitigation strategies are robust and cost-effective in the long term, even if they incur higher upfront expenses. This aligns with the ethical duty of care owed to consumers and the regulatory requirement to operate within legal frameworks, safeguarding the company's reputation and avoiding future penalties or recalls. An incorrect approach that focuses solely on minimizing upfront costs without adequate risk assessment would fail to meet regulatory requirements. For instance, neglecting to conduct thorough safety testing to save money could lead to product defects, violating consumer protection laws, and potentially resulting in significant fines, product recalls, and severe reputational damage. Another incorrect approach that prioritizes speed to market over comprehensive regulatory review might lead to non-compliance with evolving standards or disclosure requirements, exposing Li Auto to legal challenges and market manipulation accusations. A third incorrect approach that overlooks the long-term implications of environmental impact for short-term gains would contravene sustainability regulations and damage brand perception among environmentally conscious consumers. Professionals should employ a decision-making framework that integrates risk management, regulatory foresight, and ethical considerations from the outset of any new product development. This involves establishing clear internal policies for impact assessment, fostering a culture where compliance and safety are paramount, and engaging legal and compliance teams early in the process. When faced with conflicting priorities, the framework should mandate a hierarchical approach where regulatory adherence and consumer well-being take precedence over purely financial considerations, ensuring sustainable and responsible business practices. Question 12. Comparative studies suggest that companies often face challenges in managing the flow of potentially market-moving information. If Li Auto were to develop a new, proprietary battery technology that significantly enhances vehicle range and charging speed, but this development is still in its early stages and not yet ready for public announcement, which approach best balances the company's internal strategic planning needs with its regulatory obligations regarding the disclosure of material non-public information? Option A. Immediately announce the development of the new battery technology to the public via social media to generate excitement and demonstrate innovation, even though it is not yet commercially viable or fully tested. Option B. Proceed with internal discussions and preliminary planning for the technology's integration into future models, without any formal assessment of its market impact or a defined disclosure strategy, assuming it is not yet publicly relevant. Option C. Conduct a thorough internal impact assessment involving legal, compliance, and investor relations teams to evaluate the materiality of the battery technology development and plan for its eventual public disclosure through official channels, while strictly prohibiting any discussion of the technology outside of this core group. Option D. Share details of the battery technology development with a select group of key institutional investors to gauge their interest and potential investment impact, with the understanding that this information is confidential. The correct answer is C. Conduct a thorough internal impact assessment involving legal, compliance, and investor relations teams to evaluate the materiality of the battery technology development and plan for its eventual public disclosure through official channels, while strictly prohibiting any discussion of the technology outside of this core group. Explanation: this scenario presents a professional challenge due to the inherent conflict between a company's strategic growth objectives and the regulatory imperative to ensure fair and transparent market practices. Li Auto, as a publicly traded entity, must navigate the complexities of disclosing material information in a manner that does not create an unfair advantage for certain market participants or mislead investors. The core of the challenge lies in balancing the need for timely communication with the prohibition against selective disclosure of non-public material information. Careful judgment is required to determine what constitutes material information and when its disclosure becomes a regulatory concern. The correct approach involves a comprehensive internal impact assessment that meticulously evaluates the potential market implications of any proposed disclosure. This assessment must consider the nature of the information, its potential to influence investor decisions, and the timing of its release. By proactively identifying and mitigating risks associated with selective disclosure, Li Auto adheres to the principles of market integrity and investor protection, which are fundamental to regulatory frameworks governing public companies. This approach ensures that all material information is disseminated through appropriate channels, such as official press releases or regulatory filings, thereby affording all investors an equal opportunity to act upon it. This aligns with the spirit and letter of regulations designed to prevent insider trading and market manipulation. An incorrect approach would be to proceed with a limited, internal discussion of the information without a thorough assessment of its market impact. This could lead to inadvertent selective disclosure, where information leaks to a select group of individuals or entities before a public announcement. Such an action would violate regulations prohibiting the dissemination of material non-public information to favored parties, potentially leading to accusations of insider trading or market manipulation. Another incorrect approach would be to dismiss the information as non-material without proper due diligence. What might seem insignificant internally could be perceived as highly significant by the market, and failing to assess this potential impact is a regulatory oversight. Finally, delaying the public disclosure of information that is clearly material, while waiting for a more opportune moment for the company, also constitutes a failure, as it can create an unfair advantage for those who may have prior knowledge or can infer the information. Professionals at Li Auto should employ a structured decision-making framework. This framework should begin with identifying potential material information. Next, a risk assessment should be conducted to evaluate the likelihood and impact of selective disclosure or market misinterpretation. This should be followed by consultation with legal and compliance departments to ensure adherence to all relevant regulations. Finally, a decision should be made regarding the appropriate disclosure method and timing, prioritizing transparency and fairness to all market participants. Question 13. The control framework reveals a potential deficiency in Li Auto's revenue recognition process, specifically concerning the timing of booking certain sales transactions. What is the most appropriate approach to address this finding? Option A. Conduct a detailed impact assessment to determine the potential effect of the timing discrepancy on Li Auto's financial statements and compliance with accounting standards. Option B. Document the finding as a minor operational issue and monitor it without immediate corrective action. Option C. Immediately adjust all recent sales transactions to align with the perceived correct timing without further investigation. Option D. Focus solely on retraining the sales team on the current revenue recognition policy. The correct answer is A. Conduct a detailed impact assessment to determine the potential effect of the timing discrepancy on Li Auto's financial statements and compliance with accounting standards. Explanation. This scenario presents a professional challenge because Li Auto, as a publicly traded entity, is subject to stringent regulatory oversight concerning its financial reporting and disclosures. Internal control framework is designed to ensure the accuracy and reliability of financial information, which is crucial for investor confidence and market integrity. The challenge lies in identifying and responding to a potential control deficiency that could lead to material misstatements, requiring a nuanced understanding of the impact on financial reporting and compliance. The correct approach involves a thorough impact assessment of the identified control deficiency. This means meticulously evaluating the potential consequences of the weakness on Li Auto's financial statements, internal processes, and compliance obligations. This approach is professionally sound and ethically mandated because it directly addresses the core purpose of internal controls, to prevent or detect material misstatements in financial reporting. By understanding the full scope of the impact, management can prioritize remediation efforts, allocate resources effectively, and ensure that disclosures accurately reflect the company's financial position and performance, thereby adhering to relevant securities laws and accounting standards. An incorrect approach that focuses solely on the operational aspect of the control deficiency, without considering its financial reporting implications, fails to meet regulatory expectations. This would be a significant ethical and regulatory failure, because it overlooks the primary objective of internal controls in a public company context. Similarly, an approach that dismisses the deficiency as minor without a proper impact assessment risks allowing a potentially material weakness to go unaddressed, leading to inaccurate financial reporting and potential violations of disclosure requirements. Another incorrect approach, which involves immediate and drastic remediation without understanding the root cause or the actual impact, can be inefficient and may not effectively resolve the underlying issue, representing a failure in professional judgment and resource management. Professionals should adopt a structured decision-making process that begins with identifying the control deficiency. This should be followed by a comprehensive impact assessment, considering financial, operational, and compliance dimensions. Based on this assessment, appropriate remediation strategies should be developed and implemented, with ongoing monitoring to ensure effectiveness. This systematic approach ensures that risks are managed proactively, and that Li Auto maintains its commitment to accurate financial reporting and regulatory compliance. Question 14. Regulatory review indicates that Li Auto is considering a new marketing campaign to highlight its upcoming technological advancements and expansion into new geographic markets. To ensure compliance with relevant securities regulations and maintain market integrity, what is the most appropriate approach for Li Auto to take before launching this campaign? Option A. Focus the campaign solely on past achievements and confirmed product specifications, avoiding any mention of future plans or potential market entries to minimize regulatory risk. Option B. Conduct a thorough impact assessment of the proposed campaign against all applicable securities laws and disclosure guidelines, ensuring all forward-looking statements are appropriately qualified and that no material non-public information is selectively disclosed. Option C. Proceed with the marketing campaign immediately to gain a competitive edge, assuming that general market awareness of Li Auto's growth trajectory is sufficient. Option D. Disclose all planned technological advancements and market expansion details publicly through social media channels as quickly as possible to maximize reach and engagement. The correct answer is B. Conduct a thorough impact assessment of the proposed campaign against all applicable securities laws and disclosure guidelines, ensuring all forward-looking statements are appropriately qualified and that no material non-public information is selectively disclosed. Explanation. This scenario presents a professional challenge due to the inherent tension between a company's desire for rapid market expansion and the stringent regulatory requirements designed to protect investors and market integrity. Li Auto, as a publicly traded entity, must navigate these complexities with utmost diligence. The core of the challenge lies in ensuring that all communications, particularly those related to future product development and market strategies, are both informative and compliant with disclosure obligations. Missteps can lead to significant reputational damage, regulatory penalties, and loss of investor confidence. The correct approach involves a proactive and comprehensive impact assessment that prioritizes regulatory compliance and investor protection. This means meticulously evaluating any new communication strategy against existing disclosure rules, considering potential market reactions, and ensuring that forward-looking statements are appropriately qualified and substantiated. Regulatory justification stems from principles of fair disclosure and market transparency, preventing selective disclosure of material information, and ensuring that all investors have access to the same information simultaneously. Ethically, it upholds the duty of care owed to shareholders and the broader market. An incorrect approach that focuses solely on the speed of information dissemination without adequate regulatory scrutiny would fail to uphold these principles. This could involve releasing preliminary or unverified information about future product launches or market expansion plans, thereby creating an uneven playing field for investors and potentially misleading the market. Such an action would violate regulations requiring accurate and timely disclosure of material information and could be construed as market manipulation or insider trading if not handled with extreme care. Another incorrect approach that prioritizes competitive advantage over regulatory adherence would be to intentionally delay or omit material information that could benefit competitors, even if it is information that the market would expect to be disclosed. This contravenes the spirit of open and fair markets and can lead to accusations of withholding crucial data. The professional decision-making process for Li Auto in such a situation should involve a multidisciplinary team, including legal, compliance, investor relations, and relevant business units. This team should conduct a thorough risk assessment of any proposed communication, identify potential regulatory pitfalls, and develop mitigation strategies. The guiding principle should always be to err on the side of caution, ensuring that all communications are not only truthful and accurate, but also fully compliant with all applicable laws and regulations, thereby safeguarding the company's reputation and long-term sustainability. Question 15. Consider a scenario where Li Auto is experiencing unexpected production delays for a new vehicle model due to supply chain disruptions. Management is concerned that disclosing these delays will negatively impact investor confidence and stock price, potentially jeopardizing the company's ability to secure future funding for expansion. What is the most appropriate course of action for Li Auto's management regarding disclosure of these production challenges? Option A. Provide a vague update to investors that acknowledges general supply chain pressures without specifying the impact on the new vehicle model's production timeline. Option B. Focus solely on internal efforts to resolve the production issues without making any external statements until the original targets are met. Option C. Proactively disclose the production challenges to investors and regulatory bodies, providing an updated timeline and outlining mitigation strategies. Option D. Delay disclosure of the production challenges until the situation is fully resolved or a more optimistic outlook can be presented. The correct answer is C. Proactively disclose the production challenges to investors and regulatory bodies, providing an updated timeline and outlining mitigation strategies. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire for rapid growth and the imperative to adhere to regulatory compliance, particularly concerning financial reporting and investor relations. Li Auto, as a publicly traded entity, operates under strict disclosure requirements designed to ensure market integrity and protect investors. The pressure to meet ambitious targets can tempt individuals to overlook or misrepresent information, creating a significant ethical and legal risk. Careful judgment is required to balance business objectives with the non-negotiable duty of regulatory adherence. The correct approach involves a proactive and transparent communication strategy with regulatory bodies and investors, even when faced with potentially negative news. This means acknowledging challenges, providing accurate and timely updates on progress, and clearly articulating any deviations from previously stated plans. This approach aligns with the principles of good corporate governance and regulatory compliance, which prioritize honesty and transparency. Specifically, it upholds the spirit of regulations that mandate fair disclosure and prevent market manipulation by ensuring all stakeholders receive consistent and truthful information. Ethical considerations also demand that management acts in the best interest of all stakeholders, which includes providing accurate information to enable informed investment decisions. An incorrect approach would be to delay or omit disclosure of the production challenges. This failure to promptly inform the market about significant operational issues would violate regulations, requiring timely disclosure of material information. Such an omission could be construed as misleading investors and manipulating the market, leading to severe penalties, reputational damage, and loss of investor confidence. Another incorrect approach would be to present a misleadingly optimistic outlook without adequately qualifying it with the known production constraints. This misrepresentation, even if not an outright lie, would still violate the principle of providing a true and fair view, potentially leading to accusations of deceptive practices. A third incorrect approach might be to focus solely on internal targets, without considering the external impact of production delays on investor expectations and regulatory reporting obligations. This narrow focus ignores the broader responsibility to the market and regulatory authorities. Professionals in such situations should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves 1. Identifying all relevant regulations and disclosure obligations. 2. assessing the materiality of the production challenges and their potential impact on the company's financial performance and investor expectations. 3. Consulting with legal and compliance teams to ensure all communications are accurate, complete, and timely. 4. Developing a communication plan that addresses the challenges transparently and outlines mitigation strategies. 5. Maintaining open lines of communication with regulatory bodies and investors throughout the process. Question 16. Benchmark analysis indicates that market rumors are circulating regarding a potential significant product development delay for Li Auto. What is the most appropriate initial step for Li Auto's investor relations team to take in response to these rumors? Option A. Remain silent and allow the market to self-correct as more information becomes available. Option B. Immediately issue a strong denial of all rumors to quell market speculation. Option C. Issue a public statement acknowledging the rumors and stating that the company is investigating the matter internally, promising to provide an update once facts are confirmed. Option D. Engage in social media discussions to clarify the situation and address investor concerns directly. The correct answer is C. Issue a public statement acknowledging the rumors and stating that the company is investigating the matter internally, promising to provide an update once facts are confirmed. Explanation. This scenario presents a professional challenge because Li Auto, as a publicly traded company, must navigate the complex landscape of regulatory compliance and ethical conduct when responding to market rumors. The core difficulty lies in balancing the need for transparency with the potential for market manipulation or the disclosure of material non-public information prematurely. A hasty or ill-considered response could lead to significant legal repercussions, reputational damage, and loss of investor confidence. Careful judgment is required to ensure any communication is accurate, timely, and compliant with all applicable regulations. The correct approach involves a measured and fact-based response that acknowledges the existence of the rumors without confirming or denying specific details that could be market-moving. This approach prioritizes accurate information dissemination and avoids speculative statements. It aligns with the principles of fair disclosure and market integrity, ensuring that all investors have access to the same material information simultaneously. This is crucial for maintaining a level playing field and preventing insider trading or other forms of market abuse. An incorrect approach that involves issuing a blanket denial without proper investigation risks misleading the market if any part of the rumor has a basis in fact. This could lead to accusations of misrepresentation and potential regulatory action for providing false or misleading information. Another incorrect approach, such as engaging in speculative commentary or providing vague assurances, fails to offer concrete information and can fuel further rumors or create uncertainty. This can be interpreted as an attempt to manage market sentiment rather than provide factual updates, which is ethically questionable and potentially a violation of disclosure rules. Finally, an approach that involves ignoring the rumors entirely is also professionally unsound. This can be perceived as a lack of accountability or an attempt to hide information, which can erode trust and lead to increased speculation and volatility. In many regulatory frameworks, companies have an obligation to address material rumors that could impact their stock price. Professionals should employ a decision-making framework that begins with a thorough internal investigation to ascertain the factual basis of the rumors. This should be followed by consultation with legal and compliance teams to determine the appropriate regulatory obligations and communication strategy. The ultimate goal is to provide clear, accurate, and timely information to the market in a manner that upholds regulatory requirements and ethical standards. Question 17. The investigation demonstrates that Li Auto has identified a potential significant disruption to its supply chain that could impact production timelines for a key upcoming vehicle model. The internal assessment suggests this disruption is material, but the full extent and duration are still being evaluated. What is the most appropriate immediate course of action for Li Auto's investor relations and legal teams? Option A. Immediately issue a press release detailing the potential supply chain disruption, its estimated impact, and the steps being taken to mitigate it, while acknowledging the ongoing evaluation. Option B. Continue to monitor the situation internally and gather more definitive information before making any public statement to avoid premature or inaccurate disclosures. Option C. Focus on developing a positive narrative around the company's resilience and innovation to offset any negative perception from potential future disclosures. Option D. Inform key institutional investors and analysts privately about the potential disruption to allow them to prepare their assessments. The correct answer is A. Immediately issue a press release detailing the potential supply chain disruption, its estimated impact, and the steps being taken to mitigate it, while acknowledging the ongoing evaluation. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire to present a positive image and the regulatory obligation to disclose material information accurately and promptly. Li Auto, as a publicly traded entity, is subject to stringent disclosure requirements designed to protect investors and maintain market integrity. The challenge lies in balancing the need for timely communication with the potential for premature or incomplete disclosures that could mislead stakeholders or violate regulatory mandates. Careful judgment is required to determine what constitutes material information and when its disclosure becomes mandatory. The correct approach involves a thorough and objective assessment of the information's materiality and the applicable disclosure timelines as mandated by the relevant regulatory framework. This approach prioritizes compliance with regulations, ensuring that investors receive accurate and timely information to make informed decisions. Specifically, it aligns with the principles of fair disclosure and market transparency, preventing insider trading and market manipulation. The regulatory justification stems from the need to uphold investor confidence and the integrity of the capital markets. An incorrect approach that focuses solely on managing public perception without a rigorous materiality assessment risks violating disclosure obligations. This could lead to accusations of selective disclosure or misleading statements, incurring significant regulatory penalties and reputational damage. Another incorrect approach that delays disclosure beyond the mandated timeframe, even if the information is eventually released, can be equally problematic, as it deprives the market of crucial information when it is most relevant. This can create an unfair advantage for those who may have access to the information before its public release. A third incorrect approach that relies on speculation or unverified information for disclosure would fundamentally undermine the reliability of information provided to the market, leading to investor confusion and potential legal repercussions. Professionals should employ a decision-making framework that begins with identifying potential material events. This should be followed by a rigorous assessment of materiality, considering the likelihood and magnitude of the event's impact on the company's financial condition or stock price. Consultation with legal and compliance departments is crucial to interpret regulatory requirements and determine the appropriate disclosure timing and content. A proactive and transparent approach, guided by regulatory principles, is essential for navigating such situations ethically and effectively. Question 18. The analysis reveals that Li Auto has identified a significant, albeit preliminary, technological advancement in its battery technology that could substantially impact future product performance and market competitiveness. What is the most appropriate immediate course of action for the investor relations and legal departments to ensure compliance with regulatory requirements and ethical disclosure practices? Option A. Conduct a detailed internal assessment to determine the materiality of the advancement and consult with legal counsel on appropriate disclosure timing and content. Option B. Inform key institutional investors and analysts privately about the advancement to gauge their reaction and potential market impact. Option C. Immediately issue a press release announcing the potential breakthrough to inform the market of Li Auto's innovation. Option D. Delay any public announcement until the technology is fully commercialized and its impact is definitively quantifiable. The correct answer is C. Immediately issue a press release announcing the potential breakthrough to inform the market of Li Auto's innovation. Explanation. This scenario presents a professional challenge because Li Auto, as a publicly traded entity, operates under stringent regulatory scrutiny, particularly concerning its financial reporting and disclosures. The challenge lies in balancing the need for timely and accurate information dissemination with the potential for market manipulation or the premature release of material non-public information. A professional must navigate the complexities of securities laws and ethical obligations to ensure fair and transparent market practices. The correct approach involves a thorough, documented assessment of the information's materiality and the appropriate timing for disclosure, adhering strictly to the relevant regulatory framework. This ensures compliance with disclosure obligations, prevents insider trading, and maintains market integrity. Specifically, it aligns with the principles of fair disclosure and the prohibition against selective disclosure of material non-public information, as mandated by securities regulations. An incorrect approach that focuses solely on immediate public release without proper assessment risks violating disclosure rules if the information is not yet material, or if its release could be construed as market manipulation. Another incorrect approach, which involves withholding information indefinitely or selectively sharing it, directly contravenes the principles of transparency and equal access to information, leading to potential regulatory penalties and reputational damage. A third incorrect approach, relying on informal communication channels for sensitive updates, bypasses established compliance procedures and increases the risk of inadvertent selective disclosure or misinterpretation. Professionals should employ a structured decision-making process that begins with identifying the nature and potential impact of the information. This should be followed by consulting internal compliance policies and relevant regulations. If materiality is uncertain, seeking guidance from legal and compliance departments is crucial. The decision on disclosure timing and method must be based on a clear understanding of regulatory requirements and ethical considerations, prioritizing fairness and transparency for all market participants. Question 19. The evaluation methodology shows that Li Auto has developed a breakthrough in its next-generation battery technology. This innovation has the potential to significantly reduce charging times and increase vehicle range, which could substantially impact the company's market position and investor valuation. Considering the need to comply with all applicable securities laws and maintain fair market practices, which of the following actions best represents the appropriate response for Li Auto's management? Option A. Share the details of the breakthrough with key institutional investors privately to gauge their reaction and potential investment interest. Option B. Wait for a competitor to announce similar technology before disclosing Li Auto's innovation to maintain a competitive edge. Option C. Immediately announce the breakthrough on Li Auto's official social media channels to generate excitement and inform the public. Option D. Conduct a thorough internal review of the technology's readiness, consult with legal and compliance teams regarding disclosure obligations, and plan a formal announcement aligned with regulatory requirements. The correct answer is C. Immediately announce the breakthrough on Li Auto's official social media channels to generate excitement and inform the public. Explanation. This scenario presents a professional challenge because Li Auto, as a publicly traded company, must adhere to stringent disclosure requirements and maintain market integrity. The rapid development of new energy vehicle technology, particularly in areas like battery management and autonomous driving, creates a constant flow of potentially material information. Deciding when and how to disclose such information requires a delicate balance between informing investors and avoiding premature or misleading statements that could disrupt market stability or create unfair advantages. The pressure to innovate and compete in a fast-paced industry can tempt companies to disclose information before it is fully verified or before regulatory requirements are met. The correct approach involves a proactive and systematic impact assessment that prioritizes regulatory compliance and investor protection. This means thoroughly evaluating the potential market impact of any new development, consulting with legal and compliance teams to ensure adherence to all relevant disclosure rules, and timing the release of information strategically to coincide with official announcements or regulatory filings. This approach upholds the principles of transparency, fairness, and market integrity, which are fundamental to maintaining investor confidence and complying with the spirit and letter of securities regulations. An incorrect approach would be to disclose information based solely on its perceived positive impact on Li Auto's stock price without a comprehensive regulatory review. This could lead to selective disclosure, where material non-public information is shared with a limited group, violating fair disclosure principles and potentially leading to insider trading accusations. Another incorrect approach is to delay disclosure indefinitely, even when a development is significant and could influence investment decisions. This can be seen as withholding material information, which is also a breach of regulatory obligations and erodes investor trust. Finally, disclosing information through informal channels or social media before official channels are utilized is highly problematic, as it bypasses established disclosure protocols and can lead to market confusion and regulatory scrutiny. Professionals should adopt a decision-making framework that begins with identifying potential material information. This should be followed by an immediate consultation with the legal and compliance departments to assess the information's materiality and the applicable disclosure obligations under the relevant regulatory framework. A thorough impact assessment, considering both market and regulatory implications, should then guide the timing and method of disclosure. This structured process ensures that all decisions are grounded in compliance, ethical conduct, and a commitment to fair market practices. Question 20. To address the challenge of accurately forecasting the financial impact of Li Auto's upcoming premium electric vehicle launch on its quarterly earnings, which of the following approaches would best ensure compliance with regulatory disclosure requirements and maintain investor confidence? Option A. Focus the impact assessment primarily on the anticipated surge in pre-orders and positive market sentiment, using these as the main drivers for financial projections. Option B. Expedite the impact assessment process by using simplified projections based on historical performance of previous product launches, without accounting for unique market dynamics of the new vehicle. Option C. Rely on preliminary market research and competitor performance data to estimate the financial impact, without detailed internal cost analysis. Option D. Develop a comprehensive financial model that incorporates realistic sales projections, production costs, marketing expenses, and potential supply chain disruptions, documenting all assumptions and sensitivities. The correct answer is D. Develop a comprehensive financial model that incorporates realistic sales projections, production costs, marketing expenses, and potential supply chain disruptions, documenting all assumptions and sensitivities. Explanation. This scenario presents a professional challenge because Li Auto, as a publicly traded company, operates under strict regulatory scrutiny regarding its financial reporting and disclosures. The pressure to meet investor expectations and maintain a positive market perception can create an environment where there's an incentive to present financial information in a way that might be misleading, even if not overtly fraudulent. The core of the challenge lies in balancing the company's commercial objectives with its legal and ethical obligations to provide accurate and transparent financial data. Careful judgment is required to ensure that any impact assessment of a new product launch on financial performance is grounded in realistic projections and adheres to accounting standards and disclosure requirements. The correct approach involves conducting a thorough and objective impact assessment that considers all potential financial implications of the new product launch, both positive and negative, and projecting these impacts based on reasonable assumptions and available data. This approach is professionally sound because it aligns with the regulatory framework governing financial reporting, which mandates accuracy, completeness, and transparency. Specifically, it adheres to principles of fair presentation and avoids selective disclosure or optimistic bias that could mislead stakeholders. By documenting the assumptions and methodologies used, Li Auto demonstrates due diligence and compliance with disclosure obligations. An approach that focuses solely on highlighting the potential positive financial impacts while downplaying or ignoring potential negative ones is professionally unacceptable. This selective focus can lead to an inaccurate representation of the product's likely financial contribution, potentially violating regulations that require a balanced and comprehensive view of financial prospects. It also raises ethical concerns about misleading investors and other stakeholders. Another incorrect approach is to rely on anecdotal evidence or industry buzz rather than rigorous financial analysis. This lacks the objectivity and substantiation required by regulatory bodies and professional accounting standards. Financial projections must be based on sound methodologies and verifiable data. Finally, an approach that prioritizes speed and expediency over thoroughness, leading to a superficial impact assessment, is also professionally deficient. Rushing the process can result in overlooked risks, inaccurate projections, and ultimately, noncompliance with disclosure requirements. The professional decision-making process for similar situations should involve a structured approach. First, clearly define the scope and objectives of the impact assessment. Second, gather all relevant internal and external data. Third, employ appropriate analytical tools and methodologies, ensuring assumptions are documented and justifiable. Fourth, consider both upside and downside scenarios. Fifth, Review the assessment for accuracy, completeness, and compliance with all applicable regulations and ethical standards. Finally, ensure clear and transparent communication of the findings to relevant stakeholders.